Are we good? Testing, testing. Now we're good. We're good. Yeah. Sorry about that, guys. Good morning. Good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Just gonna toss that behind me. Those are my AirPods. They weren't connected on Bluetooth. Of course not. Doesn't matter. We're back at it. Good morning. Uh, Welcome to the Morning Note, 9 a.m. Eastern Standard Time. Let's rock and roll. If you are new here and you haven't subscribed already, make sure to hit that subscribe button so you don't miss any of our morning notes every morning, 9 a.m. Eastern Standard Time. Keep in mind, Thursday is Thanksgiving Day. No market open that day. Enjoy your families, enjoy some football. But we'll be talking beforehand. So I'm going to go ahead, and I didn't say much before I realized I didn't have any sound. So don't worry. The main point I was making is that hours of operation in terms of the stock market do kind of change the day after Thanksgiving. I think they're only open till 1. I'll get that information out to you guys this weekend with including the newsletter. If you are interested in our newsletter, make sure to go to garcapitalfx.com. Let's go ahead and bring that up rather quickly. GARCapitalFX.com. Just go ahead and click to log in if you have not. You don't need to buy anything. It's free. Just go to sign on with email. We're not going to fill you up with spam or anything like that. It's just a newsletter that we send out every week. Again, breaking down all the analysis for the past week and what we see moving forward, all that information. And again, very, very easy to read. It's not something that, death by PowerPoint, I promise. Nice and easy to read. If you were someone that liked Cliff Notes in college, the newsletters for you. So make sure to sign up for the newsletter. It's free. GARCapitalFX.com. You don't need to buy anything. Just go ahead and sign up with your email. We'll make sure to get that out to you. With that being said, welcome aboard. Let's go ahead and talk about the futures market. Dow futures up 236 this morning. NASDAQ up 1%, 1.07%, 39.92, slightly under 4,000 on the S&P futures. Russell 1863 now decides to go up when I have IWM calls that expired on Wednesday. 1% up today, 1.17. Look at crude oil continuing to fall, 78.87 a barrel, down 3%. $2.40 for gasoline futures, down 2%. 10-year Treasury yield, 3.784%. The dollar is flat but red, down 0.08% at 106.60. We'll chart that. The VIX down 2%, 23.45. Let's go to gold. I don't have any. Okay, we're flat. 1763. Silver up 0.55%, 2109. Pretty much a flat dollar, not doing anyone much favors out there in commodity land. Euro dollar down flat, 103.64. 139.93 for the dollar yen. That's down 26 pips. And the pound dollar up 32 pips, 119 flat. Bitcoin futures are up, even with the dollar being flat, up about 0.5%, 16,610. Even with all these headlines, I don't know how Bitcoin is still even above 10,000 at this point. A resilient little thing, I guess. 1207 for Ethereum, up 1.68% this morning. Okay, so let's go ahead and start with the dollar like I usually do. Dollar. Ray knows it. Let's go to the daily. We know our targets, and I'll go over it on the newsletter again. 104.61, 104.88, that 200 day. That's what we're looking for. We've been kind of hovering around there, kind of creating a little bit of a base. We'll see maybe, possibly, if we do bounce a little bit and reject 110, we could have a head and shoulders pattern, possibly. But again, we'll just play it by where we can hope that we get down to 104.61. So you're probably saying to yourself, well, Carlos, why is the market bouncing this morning? Yesterday we were down. Look at this big wick red candle on the daily. If we go ahead and bring up the 15-minute chart, we can start breaking down the day yesterday. You can see futures sold it, cash open buys it, chop side, futures buys it. And now we're at a pretty much a critical inflection point on the 15-minute chart. That's right around 4,000 is your resistance. Let me make sure that I have, okay. So we have a resistance coming up around 4,000, probably a big gamma level for dealers, maybe a level set for a lot of stops. So again, with an OPEX day today, all options expiry close for November contracts today. With that being said, we may get that 4,000 level being tested rather soon. We could break above it. Who knows? We could just be chopping around. Again, I just expect higher than usual volume. I said it before I said that by Thanksgiving, we'll get to the 200 day. That keeps falling because stock prices are steep going sideways and falling. So again, 40.69 is still my target by next week. That's really not that far away. We may get there by today. Who knows? We did have SPY calls that we hit yesterday for today expiring, the 395s. Again, a great play off the great play like it's football. 200-day moving average, 200 MA on the 1 hour. We played that bounce, and it also coincided beautifully with the 100-day moving average on the daily. That's why we played that level on SPY, and it's now deep in the money. I have one contract remaining. Disney went to hell, so maybe if SPY soars, I can maybe make up a little something for Disney. But that was really the big L of the week for me. Qualcomm, I traded on my own, didn't get that. That's another L, but it wasn't a signal, thankfully. But the other one was IWM, and I thought we were going to get that push higher to 190. We got to 189.56 and we rejected and fell. So, and it was for Wednesday expiry, which really sucks. But either way, maybe I could have got some kind of premium out of it, but it's an L as well. That was for Masterclass. We got to make that up, and we will. But that's pretty much our week so far. Qs we hit, AMD, very nice trading this week. Slow and steady wins the race. I hope to get some nice bags on SPY. I'll give you guys a screenshot on the Discord channel when we go. Remember we talked about this yesterday, team. We talked about this. Let me go and bring this up here. Equity put call ratios. Remember the CBOE spiked to its highest since 1997. That was on Wednesdays. And then we looked at this put to call ratio chart. This is from yesterday. So what happens when you have everyone on one side of the fence? It goes the other side sometimes. So it looks like just a short squeeze. That's why I expect us to go higher. Again, too many bears. Too many bears. We need that to go away. Too much how do I say this? I guess it's a word I'm looking for. Too much pessimism. There you go. Too much pessimism in the market. So with that being said, this is what you get. You get an ignition squeeze higher. Now the question is, do we break above 40.50? That's the relative high. Again, 40.50 will get us very close to that 200-day. That's my target on the day. So if you really want to go and say, what's the stock of the day, Carlos? Well, good old SPY. If you break above 400, then you could start targeting 405s for next week. That would probably be the only setup I like temporarily. But I would go ahead and cut it here at 403.42. As a stop, I probably keep the stop pretty close, right around 396. So it kind of gives you a 4-4, 1-1, kind of a coin flip play. But again, if you're expecting some OPEX squeeze, SPY to 404, you get the 405 calls for next week. You could do it for Monday or Wednesday. I wouldn't do it right now, but again, let's see how we open and everything. Let's see another stock that I want to take a look at. One more. Apple, I was looking at. If it breaks 154, maybe. Microsoft was green yesterday relative to the market. Not so much. How about Qs? Okay, look at this. Qs are interesting. Let's take a look at the daily. See that nice trend line that we got? We're starting to break above it, which is nice. And we did break above it. 291 is your resistance. That's the 100-day moving average. If you get above 286.42, maybe you can play the 290s for a $4 pop into next week. Right now, you're at 287.53. Man, that sucks that we're getting that upside now. If I could be honest, guys, sit on your hands. Not much to go around. I guess SPY is the best on the board. Let's see if we break 400 before we start making any decisions. I already have SPY, so I may not jump into it. But stock of the day, you know how that goes. In terms of macro, again, we talked about the dollar, that key level. Let's go and talk about the volatility index. And again, regarding the volatility index or the VIX, you can see this nice channel here, broke out of it, came back down. We could always retest 22. But for right now, we're kind of stuck in a range between 22.5 to around 24 to 25. Not much to go by there. That's not a lot of edge for us. So again, we're going to kind of ignore that. Yields are not giving us much in terms of kind of view of the market either. Yields are falling. Mortgage rates have fallen as well. Let's go and expand it. Now we're starting to fill some gaps. So that's a good sign. TNX is the 10-year yield. We still have this gap to fill here at 36.57. I do expect that to be filled relatively soon if the dollar does hit that 200-day. So again, it's all moving pieces together. We know that the dollar is pretty much the tail that's wagging the equity dog, per se. And let's answer some questions. Also, good luck in fantasy. Battle for first in our division. All right, William, there you go. Happy Friday. Oh, I had a horrible week in fantasy last week. I was like at a 6-game winning streak. I had to start Aaron Rodgers this week because Kyler Murray is probably hurt. So Aaron Rodgers gave me 2 TDs. Aaron Rodgers only beats my Cowboys, so I don't care anymore. Fuck that guy. I love Aaron Rodgers, but my God, he pisses me off. And I've seen him play live, man. He is really good. Is space a dead stock? Space, you're talking about Virgin Galactic. High yield, high beta stock. We know what happens with these guys. They got nuked, just like pretty much every high beta in the world. So, really, it's a bet on this, if I could tell you that. Do you expect deflation to come, where inflation has peaked and rates may get cut? Because that's the only time when we have an accommodating, easy market where names like these will soar. How to time it's going to be relatively difficult. So again, if you own it, you want to hold it, fine. If you need the money, sell it, get rid of it. If it's making you lose sleep, fine. There is some tradable ways around this name, but we need a dovish Fed. That's really all we need. We need a weaker dollar. We need a dovish Fed. We need rates to go lower. All of that together. This is the kind of stock that only attracts cheap money. When money is very restrictive, you're not running and buying Virgin Galactic. You're not buying those high beta names like a Carvana. You're going to go ahead and be more defensive. You're going to buy a Coca-Cola. You're going to buy a Procter and Gamble. You're going to buy a United Health. You're going to buy a Humana. You're going to buy whatever other value stock out there, Berkshire Hathaway. You're staying away from this stuff until speculation comes alive more. That means the next cycle, next bull market. So I would just wait for that. I mean, buying it here, there's no edge. I mean, other than you're trying to see if you can fill a gap at around $8, and that's just a trade. Be a nice trade if you can pull it off, but then you're just waiting for news and everything like that. And I think you're better off looking elsewhere. If you need the money, sell it. If you don't need the money, just hold it at this point because you might just have hit a bottom if we have already hit peak Fed hawkishness. If you notice, you see that October right here in October. This is all the CPI number. Yeah, less easier, more accommodative money policy is going to get you these names to soar again. Why does high put call ratio not mean high VIX? The volatility index has been kind of being decoupled from the stock market in a little bit, in little minor ways, excuse me. Let's go to SPX and we can go ahead and compare them. So we're going to go ahead and go to add study. We're going to compare it with the volatility index. We'll do custom symbol, VIX. And again, you could see how choppy the volatility index is. Again, yeah, you see that, we peaked out here right before that CPI, but again, it hasn't been that one for one coexistence together, or excuse me, an inverse correlation. You're just not seeing it that much the way it used to be. You're not getting a ton of fear out there. But I think the put call ratios could just be one or two things. These short-term expiry, the way we'd like to do it, expiration trades that everyone's kind of jumping on, and that's skewing the put call ratios. It may not show longer time frames. Again, the put call ratio is not telling us these puts that are for long dated. They're really short dated. So a lot of people are just volatility traders at this point. In a sense, that's what we are too. So with that being said, the VIX is not going to show us exactly the fear gauge because it is measured by calls in the market too. And then of course the rate of change, or ROC, in the S&P 500, because that's what the S&P 500 VIX is. You also have an oil VIX. You have a gold VIX. There's different types of volatility indexes, but the VIX one, the one we mainly look at, is based on the S&P. And again, of course, call ratios with puts being skewed. Like you said, you would expect VIX to be higher. It is gone a little bit higher, but not enough to actually indicate fear. I think the put positioning is more, just like I said, positioning, and that's where we are. And I wouldn't put too much emphasis on the VIX at this very moment, but that could change as always. So, I mean, this is why we're here, because things may change very easily. So let's go ahead and edit studies. We'll remove this comparison, get back to it. All right, that's the S&P 500 index. Why is oil falling so much? Simple. Demand for oil in China. When you had the COVID lockdowns, as they're still going through it, you're not getting that demand like you have in China. And of course, in the US, we have a lot of supply. We're starting to get more reserve. We're starting to get those reserves out. Obviously, we're still continuing to get those reserves out. I don't know when we're going to replenish them, but whatever. At this point, we do have a lot of supply. Demand is not catching up. So again, look at crude oil. And crude oil is really just in the same spot that we've been talking about for a while, really just between 85 and around 75. Energy stocks are still outperforming crude oil itself. So it's not like energy companies, are doing terribly. But again, you want to talk about a bubble. Everyone likes to talk about bubbles, stock market bubbles. How about the oil bubble? 130 to 78. Geez, that's a big drop. I mean, that's more than the S&P. That's more than the Nasdaq. Okay, oil is beating Bitcoin, but that's not saying much. But with that being said, crude oil again is a demand story, and we do have a lot of capacity. We do have a lot of inventories. Inventories just came out; they were less than expected, but it's been consistently higher. And again, the main issue is that COVID lockdown, and the second part of it is the Russian price caps on oil. If there is any kind of peace deal in Ukraine with Russia, fingers crossed, you never know. Nothing has been reported. Oil is going to sink further. So it's a very tough sector in a sense to expect growth, but energy is still very cheap. It's just the commodity for oil is down. That's the best I could give you on that. What is the best ticker to invest right now? The best ticker to invest right now, in my opinion, I do have Target. I like Target, but it's a riskier one. I added to it, as you guys know. And there's another gap to fill here on the daily to the upside. We talked about this gap. I expect us to fill this gap here to 177. That's a $17 move, and I'm still waiting for my 209 level, and I'm going to get rid of it. And that should be a great buy since we bought in around, I think our average price now is around 155. Pretty good risk reward return. If it gets below 140, then we would just cut it if that was the case, if we wanted to sell it. But I would say target right now. In terms of a trade, in terms to invest, it's very simple. SPYG, S&P 500 growth fund. That's what I buy every week. I think it's the best because you get the actual diversification of multiple big companies. Apple, Microsoft, Berkshire Hathaway's in it. I believe Home Depot's in it. So it's not just all tech. Meta is a very small slice of it. But again, SPYG is the one I like. Have a great rest of your weekend. We will catch you guys next Monday for the morning notes. And let's see if we get above 4,000 here on the S&P. Have a great rest of your morning. Cheers.